Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
This is the COB, and it is a Wednesday, the 11th of October. Boy, yeah, I'm Nadine Blaney. That's not what's so exciting about the day, trust me.
Hey, nice to meet you. I'm Danny Akuye. Long time no see.
I know, I was thinking, it feels...
We're both in blue today, but it's not a blue day. It's actually an upbeat, buzzy, green on screen day. And I think we're looking now 3 or 4 days of the ASX.
No, this is going to be number 5.
Number 5,
yeah,
is it? Gosh,
yeah.
I'm losing
You're
track.
You're losing track, but it looks as if it's going to be closing up by about 0.6%. I mean, if we take a quick look at the COB Australia Index, because of course it is the first to close. The curtains come down on it earlier. I mean, it was yet another positive session. Do you know I spoke with Tony Sycamore from IG during the trade today? It is up online, ausbiz.com.au, the trade, if you want to have a look. And he is calling it a Fed pivot. And he reckons there is plenty of upside for equities from here, not just for the US, but here in Australia as well.
It is really monumental if the market gets a whiff that the Fed has really stopped hiking. And I think behind the scenes, when they saw that steepening, that bear steepening, the yield curve moving up so steeply, I was talking about it with guests all last week, what's going to break, because people forget we live in a really indebted world now, heavily financialized as they call it, and there was a gilt crisis a year ago in the UK. I think they put on a brave face, but ultimately the Fed, the Treasury, Janet Yellen going, this is all getting a little bit too spicy. We don't need at this stage of the cycle to have a big hedge fund blow up or something go awry. So I think Tony's thesis might potentially have some legs.
Yeah, well, he was saying, look, he doesn't reckon the market's fully absorbed what the language and the rhetoric coming from Fed speakers in the wake of what happened last week in bond markets has been fully digested and fully brought on board because, he said there's no, well, I don't want to give it all away. You can listen to the interview yourself, and I hate paraphrasing and getting it slightly wrong, but, that the Fed will never go from an extremely restrictive stance to cutting. So there has to be this in between. So this is
and
the
it's
pivot.
It's I guess it's the thing, the pivot. People get confused because they think a pivot is like you're going to drop rates straight away.
Yeah.
I guess it's more, it's always shades of grey in the subtleties of the tone. And the tone is like, well, longer end of the curve has higher rates, therefore they don't have to keep on basically lifting at the short end because the bond market is doing the work for them. But we will see those long yields coming down if they start to say, yep, they're on hold now. They're just going to sit and wait and see. So I think that in itself is the pivot. Like the market's taking out any rate rises for next year. So it means
spicy.
Technology. It means basically too.
Yeah.
It's really interesting because if you look at the market dynamics of the sectors, what's running. So in the US, utilities, which were absolutely pounded, starting to run. You're seeing some of those more interest rate sensitive stocks like, for example, in the solar industry, absolutely pummeled. SolarEdge, First Solar, they're up all 5% last night. So even we've been talking small caps, haven't we, Nadine, as a theme, big article in the Wall Street Journal about small caps coming back into focus. So even if you're not looking specifically at the bond market, you might see equities starting to sniff out this.
Yeah, looking beyond those magnificent 7, and that is one of the big themes that we've been keeping our eye on in the newsroom, and you can always catch up on the small caps news. It reminds me of a conversation I listened to with Steve Johnson from Forager Funds. Look for those small companies that are almost profitable or getting to profitability, just made profitability, that have been very, very beaten down, and that's where a lot of the upside may be. You can also find the small cap series on our website as well. So it is a lot about the rally continuing. It's about goiter gone, and it's about a lot of the AGMs that we've been getting some insights into companies. But let's run you through some of these sectors that did outperform. 10 of the 11 sectors were higher today.
Absolutely. And there we have consumer discretionary stocks. They're a classic case in point too. They might start to run a little bit. And Domino's has had an upgrade. I know the name escapes me. Which broker was it? Jefferies? No, it mightn't have been Jefferies. Has basically said the company is at a turning point, so it has now done all the hard work and profitability should start to improve. So Domino's leading those consumer discretionary stocks up 3%.
I think that's really interesting because that was such, a maligned stock, particularly after it, I guess, failed to respond to a lot of those inflationary pressures. Quick, smart. All right, what else moved the day today? Look at these big miners. BHP up by 1%.
And I think what we saw in the Singapore iron ore market, we've actually seen some price movements there, which is supporting. So basically, iron ore futures on Wednesday were moving higher with the Singapore benchmark rebounding after 6 straight sessions of declines. And so basically, the Singapore exchange climbed by 1.7% to 112.7 per 70, per metric ton after hitting a 6-week low. And the Dalian Commodity Exchange was up 1.2% to $113.62 per tonne. And what is interesting, I had a chat with Gary from Navitec. Thank you. Yeah, anyway, that will be online, but also talking about the potential for
Thank you.
China stimulus, more China stimulus, a big package possibly coming through. So clearly playing out today with some of the metals and mining stocks, but technology was actually the leading light today. This was the sector that was up by 1.49%. And Block also leading the charge, up almost 3.8%. Now, there was an upgrade to that stock, I think, over in the US, saying it had been completely overdone. But also, interesting to see WiseTech Global and Xero also up strongly, with Altium not so much.
Let's just whip through some of these. The industrials are looking good as well, mostly, in some cases underperforming the broader market. And the REIT, speaking of interest rate sensitive stocks, look at Stockland up by 1.5%, and some good gains being made there by Charter Hall Retail. So I put it out on Twitter today, got a little bit of love.
Yes.
Mic drop for Joe Aston at the AFR. I mean, Richard
There's a badge of honour, a Joe Aston retweet.
Yeah. And, obviously there's still some water to go under the bridge between now and when he leaves. Some, of course, responding and saying should have been sooner, shoulda, coulda, woulda. This is the outcome. We spoke with Helen Byrne from Swinburne University about corporate governance and the implications of that. But there you go, the Qantas share price up by 3%. I will just digress for a moment, say that I did a bit of reading with an RBC Capital Markets report out on travel and the travel stocks. Saying that back to pre-COVID levels in terms of volumes, load factors improving from the May lull back to pre-COVID levels. Also saying that ticket pricing has largely normalized with best discount prices back to pre-COVID levels.
Interesting.
But capacity is still very restrained.
Yeah. Well, that's how they make money, isn't it? Don't put too many flights on, just keep them all packed up.
Yeah.
But also, too, we had the CSL AGM, as is Commonwealth Bank and IAG, and just interesting, CSL reaffirming guidance, 11% growth in earnings at the, I think that's the bottom end of the scale for full year 24. Market kind of going, oh ho hum. Commonwealth Bank, now we didn't get a direct hit on what he said at the AGM, but before that, Matt Comyn, the CEO, just saying that the Australian economy continues to still be quite resilient. So he wasn't flagging any nasties out there, and IAG just reaffirming their guidance and just saying that the quarter has started off well because we hadn't had too many bad natural peril events, which is a little bit depressing.
So, yeah, all right, yeah, of course. I did a really interesting interview with a small cap today that tracks and helps.
Yes,
I'll play it out tomorrow.
Yeah.
But talking about being in El Nino, and they monitor a lot of the risks for insurance companies, and just that, there's going to be a lot of them coming. Anyhow, Bank of Queensland reported today. It obviously has been through a bit of a tumultuous time with the regulators on its back, the CEO departing in the past year, and a board member becoming the CEO. So the profit was down by 70%. It was stock of the day.
Dividend cut.
Yeah, dividend, which is anathema for bank investors. So let's see what our guests had to say on the call.
Case of Bank of Queensland, I doubt you've got many capital gains, to be honest. Yeah. And the fact of the matter is, most of the attraction from banks, in our opinion, is from a growing dividend. Yeah. And the dividend per share has actually been falling for a lot of the banks. So you look at, I've gone on about this a couple of times, you look at what you can get on a bank bond, Commonwealth Bank bond with 3 to 5 year maturity, you're getting 5.5%, 6%. Right. When you're getting dividend yields of 4% in the case of CBA. So I just don't think the risk rewards are attractive at the moment.
Okay. We're at probably top of the cycle, net interest margins. We've seen rates, cash rates rise. Banks tend to obviously move on the loan products more than they do on deposit products, so that gives them that interest margin opening up the jaws. But we'll probably see rates start to slow down a bit, if not flatten out, and then the next, maybe in a year and a half's time, it might be downwards. So the market's trying to look ahead to where those rates are going. And as Mike said, there's not a lot of growth in lending at the moment. I think we'd have to see the property market settle down a bit before we start to see anything go on there. So I'd be neutral if I owned it. I wouldn't be chasing buying it.
Would you be chasing Bank of Queensland? I mean, it's been a pretty troubled time.
No, not at this stage.
Not financial advice, information and opinion only coming from us. Let's get some views from somebody who knows the market pretty well. Henry Dennings from Marcus Today. Henry, welcome. Yeah, the Aussie economy has been pretty resilient. We saw that in the NAB business survey yesterday, but would you be buying a regional bank, particularly Bank of Queensland?
No, Nadine is the answer. Hi, Danny.
Hi.
Hi. I've got to say, it's a pretty uninspiring set of numbers, dividend cut, etc. And you have to say that when the big boys fight, the little boys suffer. And this is really the problem. With the big boys, it's competitive enough out there with, we did see CBA, according to the RBA, losing some market share. So it's clearly a pretty competitive environment for the mortgages at the moment. Bank of Queensland, always kind of the ugly sister on the periphery. I wouldn't be touching it. Today's reaction, 7.4%, maybe a tad overreaction, but certainly not for me. I think if you're going to be in the sector, you stick with the strength, you stick with the big four, to be honest, because, as Francesca said, it is a pretty competitive world out there, and housing is not exactly an easy market at the moment. So the big boys doing okay, but the little boys not doing quite so well.
Now, Henry, something that might be a little bit of music to your ears, but not your band, is small caps. And there is some interest, I believe, growing. Big article in the Wall Street Journal about small caps. If we were just discussing earlier whether the tone from the Fed has shifted. Is it a good time to look at good quality small caps with some cash flow? Because a lot of them have been, put through the ringer.
Yeah, a lot of them have been decimated in September. And unfortunately, I was reading one report suggesting that most of the fund managers in the small cap space were sort of chock full to the gunnels with their exposure and couldn't really buy any more, which left it very much to the short sellers and those panicking and stop losses, etc., being pushed down. Volumes are still pretty light, I have to say, especially in the small caps. There's a few sort of big players in terms of volume, but the rest of it is pretty quiet. So I think it's always a good time to be looking at them. Whether it's a good time to be pulling the trigger, I'm not sure, but certainly some selective buying in some of the small caps, I think is going to be interesting to see how that pans out. And I wouldn't be surprised to see a little bit of a bottom in here. When the market does bottom, it tends to be the big caps that go first, and then we get some confidence, and then people start to look at the smaller end of the market. I think we're maybe a smidge early, but certainly it is a volatile sector. And as I say, if those sellers that were aggressive in September pull out and decide that they don't want to keep pushing things down, then you get a bit of a vacuum and you do get a pop higher at times. And we've seen that in some of those lithium names recently with big short positions and sellers retreating, and then the stock pops.
Yeah, so just to flesh it out a little bit, because for so long people were told to keep some cash on the sidelines, be ready for the opportunities. Like, you haven't missed out, have they?
No, they haven't missed out, but far from it. Well, they haven't certainly missed out. There's plenty of time. There's always plenty of time in small caps. They tend to be quite volatile. And we have seen in this market what is a hero one day is a zero the next. For instance, something like Chalice, which was flying yesterday's up down 4.2% today. So it is kind of a very volatile period in the market. And I think there's generally quite a bit of confusion in the market about what's going on. Certainly from the members that we have and the emails I get, there is some confusion still out there. And I think by no means have people missed the small cap bounce. But you're going to have to be disciplined, and you're going to have to pick the winners that you see as the winners. I mean, things like Weebit Nano, for instance, which does obviously have some exposure to Israel, has been decimated. It's sort of down 50%. It's back down to $3, and it was flying high not so long ago, doing capital raisings, etc. So there has been some big casualties in the sector, and equally that does throw up opportunities. But I think just at the moment, I'm still watching and waiting for the signs of the all clear. I'm happy to miss the first part of the rally, I must admit, just to be on the safer side, because we've been sucked in before in some of these small caps, only to be whacked again. But certainly there are some early signs that it is a lucrative place to be looking.
Henry, before we let you go for your afternoon whatever, your walk or your beer or your cup of tea.
Whatever.
Yeah, exactly. So look, Richard Goyder has kind of fallen on his sword, albeit he'll be out at the AGM on 2024. And they are... Sword. Which is a very long sword, but anyway, he's going to be the steward of renewal at the moment. Look, for Qantas, it's been heavily sold down. Everybody knows all the problems. The board seems to be finally responding. Obviously, they didn't want one of those bloodbath AGMs. Bottom fishing in that one, is that worth having a look at?
I think it is to some extent. Obviously, there's been a lot of negativity about Qantas. It does strike into our national sort of psyche to some extent, Qantas, and it is also easy to bag. Contrary, the other argument, of course, is that the oil price is rising, so that certainly hurts in terms of operational efficiencies with those airfares, and also those airfares still staying stubbornly high and consumers under pressure. So I must admit, I'm not rushing. Obviously, Richard Goyder's not rushing either. He's still got another year at the trough to sort out his legacy. Alan Joyce, of course, his legacy is well and truly written in the stars now. But no, for me, it's just a little too early in Qantas. You got to remember the new CEO was the old CFO. So, the song remains the same for the time being. You've got to watch what they do, not what they say, and not what the board's trying to avoid in terms of a bloodbath at the AGM in November.
Yeah. CFO, I think she's been at the company for 30 years. So, very instrumental in a lot of the decisions that would have been made over the long period. But hey, Henry, we'll let you go so you can go do whatever. Oh no.
Thanks. I'll go and do my whatever. Thanks, Nadine. I'll do my whatever.
Thanks, Henry from Markets Today. All right, market leaders, let's get cracking. See what led this market higher today. In fact, this is obviously by percentage terms, because when you think about it in market cap terms, you can think of the big players like BHP, up by 1.25%, Rio, Fortescue, Wesfarmers, Woodside as well. We haven't talked energy, but some of those energy names are doing well. And I think as well it's worthwhile mentioning that Chevron and the LNG unions have extended their pay deal talks until Thursday. So that's a bit of news coming from the space. In terms of the leaders by percentage terms, think of Neuron Pharmaceuticals, think of Bega Cheese, no news, think of Pexa Group, Block, Link Administration, and then you get into Domino's, which we've already mentioned. NextDC also saw Jefferies saying that it could win some more contracts coming through with sustainability improvements. Some of the laggards, though, Bank of Queensland.
Yeah, that was a bit
pretty punchy.
It is pretty punchy. That's actually been a bit of a cliff, that one's been off. Also, Chalice Mining again under selling pressure. Liontown Resources, isn't that interesting? Because Gina's been
Yeah.
Have I got that right? I always get confused.
No, that's LTR in Liontown.
She's been up in her
Creeping up the
state there,
register.
but of course, if she goes over 19.9%, she actually has to make a takeover offer. And
I think she's at 18 point something.
18 and a
now.
half, I think. Maybe she stopped buying today. Genesis Minerals down almost 3%, and Lendlease off about 2.4%.
Yeah, again, I'm not seeing any news associated with Lendlease there. So let's look at just to the small to mid cap space of the market. Aries Resources is looking all right. Saunders International, likely some sort of a contract win that would push that share price higher, 8.6%. Flipping the page, though, to see what is lagging in the small to mid cap space. Oh, brain chip.
Yeah, up, It's like taking the elevator and the escalator on that one. Actually, no, the elevator up and down.
Yeah, all right. Look, back to us for just a little discussion. What's on overnight? Boy, I think that we've been sort of really obsessing about what's coming through on Thursday with inflation, but we do get minutes from the previous FOMC meeting.
Yep.
So giving us some insight into the Fed think.
Absolutely.
If we don't get any more Fed speak tonight.
Absolutely. And of course, the market will start to focus yet again on the inflation reading that is coming out on Thursday, US time. But maybe check in with what is happening tomorrow.
Well, I just wanted to say a PS. I was saying Fed speak. We've got Daly, Bowman, Collins.
Oh, that's right, yeah.
And we've got the producer price index for September. So,
interesting.
Lots
So
actually.
They're putting the PPI out before. That's interesting.
Yeah, I think they usually do.
Do
now,
they?
tomorrow, let's take a look
We've got some AGMs, Brambles AGM, AZJ.
And of course, we've got a whole host of really fantastic guests lined up for you.
Because there is,
as
of
well.
course, the Citi Group conference.
Yeah.
So there'll be lots of great interviews with Citi tomorrow and I think on Friday. So lots to tune in for. Should we have a final check on where the market's closed? So I've got the ASX 200 up about 47.8 points, which is a 0.68%, 7,088. CBO 200 up almost 7 points or 0.5%.
And I'm just looking at US futures as well, Danny. Both
a bit mixed, aren't they?
Yeah, they're positive now.
Oh,
so
cool.
obviously there's still quite a lot of time. We've got the S&P 500 E-minis just into positive territory.
Aussie dollar's a little bit weaker coming. It's sort of got to 64.23 cents, and it's like, no, we're going to go south again. But who knows what'll happen? A lot can happen between now and tomorrow morning, hey?
You know, not to end on a down note, but we do have word that Israel is readying a ground offensive. You know, we've had some pretty strong rhetoric coming from the US President Joe Biden about the sheer evil, is the quote, of the Hamas attacks. And we do start to tick ever closer to some of the more significant earnings reports coming through in the United States.
Yeah, the big banks starting on Friday. But hey, we'll take a happy Wednesday and an up market, and we'll be all here. Well, actually, I won't be here tomorrow morning, but you will be, Nadine. I'll be here in spirit.
Yeah, she always is. She's always chatting with us online. I'll get my internet up and running, and it'll be like you never left. Danny, we'll see you next week. And we'll see you tomorrow, 9:30 a.m. We're live.
Have a great night.